Dear friends, it's Bashir Fadl as we continue our journey in the world of entrepreneurship. Today, we're going to talk about home ownership. There's a lot of great things about buying a home and owning your own home and how it helps you. It's that generational wealth and all the different advantages. What we wanted to do is keep it very simple. So we have 17 steps that keep it very basic, that keep it very simple. We're going to go through it one by one, and hopefully it makes it cautiously buy a home. We want to make sure we cover things very cautiously and that it's comprehensive. So let's just jump into the list. Again, if you like today's episode, please subscribe and share. Number one is it always helps to have a real estate agent on your side. So right from the very beginning, have a real estate agent on your side. Reason being, the first time I go to the bank, I speak to a banker. They might give me different rates and different ideas and different loans. When I go with a real estate agent, they go there. They deal with so many banks and bankers and loans. They definitely have a lot of valuable feedback. When I go see a home, I could see a house and love it, but they could notice very quickly there's something wrong with the paint, there's something wrong with the pipes, there's something wrong with the roof, because they do that on a regular basis. So it's very valuable, and it saves us from a lot of headache later on, usually when we start with a real estate agent right on our corner. Number two, check your credit. It's very, very important to always, have an idea of what our credit score is, because what we're going to notice is if I have a credit score of 620, you have a credit score of 760, and we buy the same home with the same down payment with a 30-year payment plan, I could end up paying $2,065 a month, and you pay $1,760 a month, more than $300 a month more for 30 years, just because of my credit score. So building and fixing my credit score is very, very important before I jump into buying a house. So if we need to do that, let's look into it. Number three, loan pre-qualification and pre-approval. Go to the bank. Now that you have a good credit score, go to the bank and get a letter that basically says you are pre-approved for a certain dollar amount. I'm pre-approved to buy a house up to $400,000. I'm pre-approved to buy a house up to $200,000. Perfect. Now I can start my search. So number four is you want to create a budget. The last point we're going to talk about are the details of the budget. So at the end of this, we're going to talk about the details of the budget, all the numbers and math that we need to do. But for now, one of the biggest pieces is the down payment. So before you go in with a down payment, there's a few things we want to notice is, again, usually people pay between 3% to 20% on a down payment. But before you jump into it, number one, look into what's called HUD. HUD, H-U-D. Again, it's a federal agency that's there to help us with down payments. If you're a first-time homeowner, you might be able to kind of get into your IRA, and there's different benefits out there. You might be able to get a $0 down, home down payment. Again, there's certain cities, I live in this county, but in the other county, there's much less population. They might have a deal where I don't have to make a down payment, or I get X amount of dollars support from the city. So always look at the city, look at the state, look at the federal level, look at the different statuses that are going to help you with your down payment. In a lot of cases, you might find out that you don't have to make a single dollar of a down payment. So that's one big thing that we want to look into. All right. Number five is create a wish list. Now that we're pre-approved, we have that letter. Now we've looked at the down payment and the best ways to settle that. We want to have our wish list, which is where do I want to live? Close to what school? Close to my workplace? Close to my kids' schools? I need this size of a house. I want to live in a condo, simply because I don't want to mow the grass and shovel the snow, versus I want to live in a house with all the space that I have and far away from any neighbors and any wall-to-wall, kind of distractions and stuff. Make your wish list. Number six is start your house search. So again, we said at the very beginning, make sure you enlist a real estate agent. If you haven't, now that you're looking at homes, you definitely want to enlist that real estate agent. They have the key and access to a lot of what's called an MLS, which is the database of all the different homes. They're very quick and going to help us very quickly in kind of finding that home. So it's very important to kind of enlist them in the search. They can show you a lot of homes. While you're looking at a home, they might be able to pinpoint details that I might not be, with a trained eye, might not be able to catch. And I might think this is the best house, but they might say, by the way, did you see this in the roof? That's going to cost you X amount of dollars and stuff like that. Number seven is do the math. Start recalculating at this point. You have an idea of what you're looking at and your payments and your budget and what the house needs in terms of maintenance and so on. If you like it, we go to step number 8, which is make an offer. At this point, as I'm trying to make an offer, so they want to sell the home for $200,000. I'm going to make an offer for $180,000. But before I do that, I want to do a little bit of analysis, and the real estate agent can help me with this. Look at the prices of the neighboring homes. This home was sold for $220,000. This home was sold for $190,000. The average is about, 200, 200 plus. So sure enough, 200 seems reasonable. Now I'm going to make an offer for less, which is 180, which takes us to number 9, which is negotiate. There's always negotiation. You always don't just give the full price, 200 and buy it or sell it. No, it's 200, you offer 180 plus minus. You and your real estate agent going to do the math on that one. And let's say it's 180. The person says, no, I'm not going to go under 192. You say, okay, 185. Okay, 190. But both, we like it. So negotiation. Now that you've negotiated, you don't have to go to the same bank that gave you the pre-approval. You remember at the beginning we said get pre-approved? You don't have to go to that bank necessarily. Now you can go to different banks and start shopping. There's banks online, there's physical banks you can walk into, and there's different models of different bank, like what's called Islamic banking, where there's no interest, and different kind of model of banking. Whatever suits you best and makes best logic for you and what you're working with. Now that you work with that, now that you shopped for a mortgage and got the loan that you're looking for, we go to step number 11, which is have the home appraised. Appraised means, yes, this is what they're selling it for, but in reality, because they have done so many additions and fixing and paintings, even though they're selling it for 200, it might be worth $250,000. Or there's so much things that are broken in there that even though they're selling it for 200, it's actually worth $150,000. So appraisal kind of helps you with that, and other things such as taxing and so on goes off the appraisal. So it's very important to go through the appraisal process. Number 12, schedule a home inspection. So you would pay someone usually that comes and does an inspection, and that person, oh my God, they go step by step. They dig into the pipes, and all the way from the basement, the paint, the roof, if there's anything in the landscape that's major. And sometimes they might come up with things that basically says you cannot buy that house or walk into that house unless those things are fixed. And usually there are just minor things where we need to fix this, we need to fix that, little bit of touch-ups and so on. But that's nice because of point number 13. Now I can go back and renegotiate based on the repairs. So I'm going to say, well, I'm going to take care of those repairs, but now we need to go down from 187 to 182. Or I'll pay 187 to the seller, but you have to fix those things before I move in. So some of those fixings, repairs and so on, allow you to kind of renegotiate a little bit more and give you leverage. Number 14 is the formal letter. This is what we call the formal offer letter. It's a letter that you write up and say, hey, this is my letter, kind of a formal letter of buying the house. Number 15 is be prepared for disappointment. So a lot of times you go through in this entire process. Hopefully it's not a lot of times. Hopefully it doesn't happen in your case, especially if you love the house. But a lot of times, this is the house. You're going to buy it for $182,000. And then the owner comes up and says, well, so, I'm going to sell it to someone else. So just expect that. And that's why we want to make sure we have a real estate agent on our side and we're doing things kind of by the book. Number 16 is close on your new home. Closing is a process where they do some certain checks and background stuff and so on. So we're going to follow that process. And then number 17, make sure you get homeowners insurance. Now that you bought the house, now that it's your own house. Again, some places have hurricanes, some places go through floods, some places go through earthquakes. You want to make sure that your home is insured as soon as possible so you don't have to lose anything that you've paid for. Those are the main 17 points. We promised you we're going to talk about the budget and the numbers. Let's do the math now for a minute. Speaking of the math, there's two numbers. There's what we call upfront cost, and then there is ongoing cost. Upfront is what I'm going to pay just one time upfront as I'm buying the house. Ongoing is kind of monthly or annual things that I have to pay for. So let's kind of go through it a little bit faster. Upfront cost. Number one is a down payment, which is usually between 3 to 20%. But as we said, depending on certain things, it could be less, it could be more, it could be less, and you choose to pay more for, to kind of save yourself more in the monthly payments and so on and so forth. So, but that's kind of the range of it. Number two, closing costs. Closing costs usually averages between 2 to 6%. Then there's the inspection. Sometimes it's a few $100 plus minus. Then there's fixing, because based on that inspection, there's a few things that I need to do maintenance and fixing around the house. So that's an additional cost. Then there's moving expenses. You might be moving from out of town. You might be moving from an apartment or a bigger house. You have all this furniture to move in. You might be getting a moving company or just jumping on the U-Haul, you and your friends, and moving things. But there's expenses kind of related to moving. And then you want to have what's called a reserve. Basically, a reserve means the bank usually, after you make your down payment and your closing costs, would like to see extra money in the account. They don't want you to wipe out every single penny. Now they're worried because they just gave you a loan for a big amount and you're going to be making payments for 20, 30 years. So you also want to make sure that you have a reserve. After I make my down payment, my closing cost, I'm still going to have X amount of dollars in there. We call that the reserve. Now comes the ongoing costs. So this is the regular monthly stuff that we pay for. Number one is the mortgage payments, which is kind of the monthly thing that we're always paying. And by the way, and you can check with your banker, usually if you make a payment during the middle of the month and the end of the month, it saves you a lot more towards the end of the loan. A little strategy or tip that you could talk to your bankers about. Number two is property taxes. Usually it's an average of 1.08% a year based on the property value, 1.08%. Again, it differs from one place to the other, but that just gives you an idea of what the average is. Number three is what we call HOA fees or association fees. If I live in a condo or a gated community with a pool and a golf course and whatever, then I'm expected to pay monthly or annually X amount of dollars for all of those privileges. Then there's what we call homeowners and mortgage insurance. So there's always insurance that we pay on average. It's about 2% of the loan amount annually. So just to be aware of that, depending on where your mortgage is going through. Then we have what's called home maintenance, repairs, and utilities. Home maintenance, repairs, and utilities. So now that I'm moving into the house, I'm going to find out, need to do a little bit of paint touch up here, need to do some landscape here. The roof might need some fixing. So there's always going to be a little bit of that. And then we have what's called utilities and maintenance. Of course, you have your electric, your gas, your water, your trash, your internet. You own the home. You're not renting anymore. So all of that falls on you most of the time. And then, of course, finally, it's your home. You love it. So decoration costs. A lot of times people want to decorate it and add different things and carpet and, whatever added decorations that you want. So it's that kind of gives you an idea of the ongoing cost in a summary. I really wish you guys the best. If you get the house for the right price at the right location, oh my God, it's one of the greatest investments for you, your family, generational wealth. By all means, I hope that you all rush and succeed in buying the right house with the right, the right time and everything else. And again, those are general guidelines. Make sure you work with a realtor that's going to guide you even better and help you through the whole process. Wish you the best of luck. Don't forget to subscribe and share. Thank you so much. Appreciate it.